Hello, everyone, and welcome to our webcast. I'm Amy Pendergrass with Moss Adams, and I'm going to get us started for today's session, COVID-19 Fraud Risks, Reassess Your Internal Controls. Before we begin, I'm going to play a brief video.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
And now I am pleased to introduce today's presenters from Moss Adams, Ashley Osten, Partner, and Keith Simovic, Senior Manager. Their bios and contact information are located in your webcast console if you would like more information. And with that, I will turn it over to Ashley to get us started.
Thank you so much, Amy. And thank you to all of you for joining us this morning. So first, I just wanted to give you a little roadmap for the next hour. First, we'll cover some fraud basics to set the stage, kind of level set amongst the group here. Then we'll cover 4 different case studies, and then we'll close out with some interesting fraud statistics and some final thoughts. So first, we'll launch into some fraud basics. So annually, the Association of Certified Fraud Examiners, which is that acronym that you see on your slide, releases its report to the nations. The statistics you see on the slide are directly from the 2020 report, which is the association's 11th study on the costs and related effects of occupational fraud. The report is really a conglomeration of the work of the individual members within the Association of Certified Fraud Examiners who share the information regarding cases they've investigated over the past year and the various lessons learned. This slide is really meant to capture some of the more eye-catching statistics to help begin our conversation this morning. So as noted on the slide, the 2020 report covered approximately 2,500 cases of occupational fraud that were investigated between January 2018 and September 2019. This included fraud occurring within 125 countries that caused total losses of more than $3.6 billion. So occupational fraud, which is what this report covers, is fraud committed by individuals against the organizations that employ them, and is obviously amongst the costliest forms of financial crime in existence. Most of those that are employed in the global workforce do have access to or control some portion of cash or assets. And while the vast majority of those employees will not abuse the trust that's placed in them by their employers, the small percentage that do can cause enormous damage, which is shown on this slide. So certified fraud examiners estimate that organizations lose approximately 5% of their annual revenues to fraud each year. That equates to about a median loss per case of approximately $125,000 and an average loss per case of $1.5 million. And then typical fraud cases last for about 14 months before being detected and cause a loss of approximately $8,300 per month. And finally, asset misappropriation schemes are the most common and least costly, representing approximately 86% of cases. And financial statement fraud schemes are the least common but most costly, representing approximately 10% of cases. So one thing that I think is important to note as we continue throughout this presentation is the reports of the nations and the cases that we are highlighting in today's presentation occurred prior to the pandemic. So as time goes on, we will really start to understand the impacts of working remotely and the overall impact of the pandemic on fraud and then fraud-related cases. Of course, we all know that the COVID-19 pandemic is unprecedented in many ways for our lifetime. After the 2008 recession, the Association of Certified Fraud Examiners surveyed hundreds of anti-fraud professionals to see what, if any, impact the economic crisis had on fraud in the various organizations that they polled. The majority of respondents said they experienced an increase in the number of frauds, and 80% said they believed fraud levels increased in times of economic distress. So with many similar factors present due to the COVID-19 pandemic, we can apply some of what we learned then to today. So there are a number of reasons fraud happens during recessions and times of economic instability. A large factor is that increased pressure organizations or municipalities and their employees feel as they struggle to meet the challenges of a down economy. So, for example, struggling organizations can face pressure to falsify their financials in order to meet budget pressures or maybe secure debt. Pressure from an economic crisis also affects an organization's individual employees and can make the organization itself a target. The most commonly accepted model for explaining fraud in the workplace is the fraud triangle that you see here on the slide, which is also kind of morphed into the fraud diamond over the recent years. And the fraud triangle really states that 3 factors generally must be present in order for a person to begin committing occupational fraud, and that's pressure, opportunity, and rationalization. And in recent years, capability was added due to the fraud diamond. In times of economic crisis, employees' personal financial pressures tend to rise, which is often where the decision to steal from an employer begins. So data from the 2020 report to the nations indicated that 42% of occupational fraudsters are living beyond their means, and you'll see that in some of the cases that we're profiling today. At the time they commit fraud, and 26% are experiencing financial difficulties. These are the 2 most common behavioral red flags for these crimes, and we'll see that again in the cases that we're looking at today. Another element of the fraud triangle, opportunity, can also be exaggerated during hard financial times. So those seeking to really cut costs often target departments like compliance and maybe internal audit. And this is generally considered a mistake. Cutbacks to those departments or initiatives that are integral to a comprehensive anti-fraud program only serve to leave those organizations more vulnerable to the growing likelihood of fraud. So as organizations make cuts in the attempt to operate with a leaner staff, then they can find themselves caught in a perfect storm for fraud. So pressures motivating employee fraud are high at the same time that those defenses intended to safeguard against the fraud have been weakened or are low. And finally, rationalization is the ability to justify the fraud. So rationalization red flags could include maybe not being compensated fairly, no recent raises or cost of living adjustments, the employee needed the money, or maybe they felt cheated and wanted revenge. So during the pandemic, we can expect potentially more fraud to occur, but also existing fraud to be discovered. This will begin to be reported, obviously, in next year's report to the nations and beyond, so just plan to stay tuned. So now we'll talk a little bit about controls, just a little bit, just to level set here. So first we'll begin by walking through preventive controls. Preventive controls are used to keep a loss or an error from occurring. So examples of preventive controls are all the items that are included on this slide. So segregation of duties, policies and procedures, spending limits, really establishing those pre-approvals or those required approvals, the use of budgets and variance reporting, requiring passwords, as well as document control numbers. These controls are typically integrated into a process so that they are applied on a continual basis, and they're especially common when the risk of loss is considered to be pretty high. So putting these items in place will lower the chances of that loss ever occurring. A detective control is designed to locate problems after they have occurred. So once problems have been detected, management can take steps to mitigate the risk that they will occur again in the future, usually by altering the underlying process. So examples of detective controls include reconciliations, like a bank reconciliation, which can detect an unexpected withdrawal from a bank account. Other examples include variance reporting, budget to actual analysis, review and approval of various statements, surprise cash counts, and inventory counts, which can spot instances in which the actual inventory may be lower than what's stated in the GL or the general ledger. While preventive controls are considered to be a little bit more pragmatic as they're put in place to prevent any problems from occurring, detective controls are after the fact. So if the issues they uncover are not remedied quickly, it can lead to additional losses to the losses already incurred. A detective control is considered to be a little bit less robust than a preventive control, since a preventive control keeps losses from ever occurring, while a detective control may result in initial losses before corrective changes can be implemented. And that brings us finally to corrective internal controls, which are put in place to correct any errors that were found by the detective internal controls. So this type of internal control usually begins by detecting undesirable outcomes and then keeping that spotlight on the problem until management can solve it. So if an error occurs, then it's really essential that an employee follow procedures that have been put into place to correct the mistake. Examples of corrective internal accounting controls include training, the actual correction of an error, so posting a journal entry, or modifying spending authorities if someone is going rogue and spending more than they should. So now let's talk a little bit about 7 keys to fraud prevention and detection. So the first is really establishing that anti-fraud culture. So critical components of an anti-fraud culture include setting the tone at the top and really leading by example. So creating a positive workplace environment, implementing a code of conduct, taking disciplinary actions when necessary, and then establishing an oversight process. So as part of our required fraud interviews with management throughout the course of an audit, one of the questions that we generally ask is, how does management communicate its views on business practices and ethical behavior to your employees? And one of the responses that I'm personally looking for as part of the audit is just setting that tone at the top. Is there a culture of ethical behavior, and is that expectation to be ethical communicated to employees effectively? And what happens if someone does do something wrong? Is that automatic termination? Is there transparency amongst employees so it's understood that fraudulent behavior is not to be tolerated? These are all important factors in creating that anti-fraud culture. Secondly, a fraud policy should be developed really to demonstrate the organization's commitment to combating fraud. So this policy could be and is often included within the code of conduct. It's important that this be signed and agreed to by all employees throughout the organization, not only when they onboard onto the organization, but also annually thereafter. Some of the items that should be present include the organization's position on fraud, the actions constituting fraud, fraud reporting and investigation processes and procedures, discussion of confidentiality, and ultimately what could happen if something does happen or consequences. The Association of Certified Fraud Examiners does provide a really good example of a fraud policy. If that's something that's needing a little bit of attention at your organization, please feel free to go to their website and check it out. Another question I often ask management and those charged with governance is, does your organization have a fraud hotline? And if it's an employee that I'm asking that may be like a payroll employee or accounts payable, can you access the fraud hotline? So the hotline needs to be accessible to all employees via phone, internet, and it should be able to be accessed anonymously by employees. So while the hotline itself can be managed internally, and sometimes it's outsourced to professionals, it's utmost critical that there are procedures in place to monitor complaints and then track them through investigation and resolution. Fourth on the list here is assessing fraud risks. So annually, each organization should walk through a fraud risk assessment. That assessment ultimately helps management identify where and how frauds might occur and who might be able to commit fraud. Typically, if an internal audit shop exists in your organization, this assessment takes place within the internal audit department with feedback from various management, but it can be taken on by management as well. If there is a fraud that is reported, then management should have a systematic and documented set of procedures to assist in guiding their fraud review and investigation process. And finally, an organization should use anything that is learned from any reviews or investigations to improve anti-fraud controls. All reviews and recommendations should ultimately come with recommendations for control improvement. So with that, setting the stage, I'll hand it over to Keith to walk through our first case study.
Perfect. Well, thanks, Ashley. So now that we've kind of kicked things off, going through some of the fraud basics, I think what we'd like to do is take a bit of a deeper dive into a handful of recent fraud cases that impacted some governmental entities across the United States. As we go through the details of each case, including the who, the what, the where, and the when of each case, what we'd like you to do is try to identify where the red flags were along the way. And maybe ask yourself questions like, what processes and controls might have been put in place to prevent some of these frauds from occurring? Or maybe how could the fraud have been detected earlier on in the process prior to growing into a larger situation? And also think about which pieces of the fraud diamond were present. I'd say oftentimes in these cases, in hindsight, of course, we find that many, if not all, of the four corners of the fraud diamond were present. In the moment, it might be very difficult to identify the presence of each of these traits, but I think for this presentation, we want to focus in on the opportunity corner of the fraud diamond. A fraudster could have the pressure and incentives to commit fraud, like we're seeing kind of in economic hard times, like Ashley mentioned during the recession, of course, what we're going through right now. And they could also, the fraudster could also be able to rationalize committing fraud in their mind because of this. So they might think the organization they work for is piling on too much work or doesn't recognize them for their efforts, or maybe pass them up for a promotion, or maybe hasn't given them a pay increase in several years. And after feeling that way for several months or even years, they might be able to rationalize committing fraud. But at the same time, if they don't have the opportunity or capability to commit fraud, it becomes increasingly difficult for fraud to occur and not be prevented or detected timely. And that means that governmental entities and their system of controls can have a huge impact on whether someone has the opportunity to commit fraud. So with that said, the key question to ask throughout each of these cases is, where was the opportunity and how did the system of controls fail? So with that, let's jump into the first case study, which takes us just a few miles outside of St. Louis, Missouri to Velda City. Okay. So for the facts of this case, let's start with the main player in the case, Venita Sedato. Now, Venita wasn't someone who transplanted to the St. Louis area from somewhere else right before working at the city. She actually grew up in the area, went on to study at nearby Lindenwood University, where she earned her degree. And after graduating, she decided to stay in the area and worked in a number of finance roles before taking her position at the city in November of 2015. Venita was hired to serve as the city's treasurer, which was kind of a top position within the city's finance department. And by stepping into this new role, she was able to gain the trust of her fellow employees. And that includes, of course, the mayor and the city council. And in addition, she also used her experience to serve part-time as trust secretary, or in a trust secretary position for a local charity that provided scholarship funds and financial assistance for the hearing impaired. So now if we pause there for a second, on the outside, it looked like Venita was doing quite well for herself, was settling in nicely to her new position at the city, while offering up her time at a local nonprofit as well. The trust she was able to gain at both the city and the nonprofit allowed her to take on some significant responsibilities within each of those finance departments, including the responsibility for authorizing and issuing both checks and electronic payments. So she had a lot of responsibility at this point in her career, and the city and the nonprofit seemed to trust her in her role as pretty much the #1 employee in finance. So where did things go wrong? Well, over an approximate 3-year period, Veneta was able to issue 90 unauthorized checks and wire payments from the city to Veneta's personal bank accounts. And overall, she was able to get approximately $400,000 out of the city's accounts, which she then used for personal items and services at various businesses. And we've listed some of those here, including BMW, Neiman Marcus, Saks Fifth Avenue. And if we stop there and pause for just a second, you can start to see some of those red flags that may have been present. And of course, the Association of Certified Fraud Examiners notes in their report that the most common red flag in fraud cases studied was fraudsters living beyond their means, and I think Ashley alluded to that as well. And that can be hard to identify in the moment, as everyone has a different financial situation, of course, but in hindsight for this case, we can definitely start to piece together that Veneta was spending a lot at very high-end retailers and on luxury vehicles that didn't seem to match up with her salary at this smaller city. So what about opportunity? How did she do it? Well, Veneta saw opportunity, of course, in several areas. And first, she had access to the ledgers in the city's financial systems to record the payments. On top of that, she had access to the bank statements and was responsible for completing the bank reconciliation. And then third, she had the authority to issue and authorize payments on behalf of the city without others needing to see them. And then finally, there was limited oversight and financial review, which would identify any irregularities or improper payments if they were in place. So looking back on this case, we can see there was a substantial amount of opportunity for someone in Veneta's role, given the access she had to the system and the lack of segregation of duties and internal controls within the procurement and disbursement process. Now, the crazy thing is the story doesn't end there with the city. I mentioned previously that Veneta also worked in an important finance role part-time for a local nonprofit as well. So you can see where this might be going. Her fraud was a bit more elaborate at the nonprofit as she submitted fraudulent grant applications to the nonprofit for her family members and friends. And those applications fraudulently, of course, claimed that the applicants suffered from being hearing impaired. And she even went the extra mile to create false audiograms and evaluations within the applications. She was able to doctor up the applications just enough that they were convincing enough to the board of the nonprofit that they approved the applications for financial assistance. So with the board approval in hand, Veneta had the authority and knew what to do within the finance department to issue the checks to the applicants, which she then had the applicants deposit the checks and split the proceeds with her. And that fraud scheme with the non-for-profit resulted in approximately $156,000 being stolen from the charity during a 4-year period, on top of the $400,000 she had already stolen from the city. So you might be wondering, well, how was the fraud caught? Well, it's interesting since her scheme at the city wasn't overly complex and she didn't seem to take too many steps to cover up the fraud. However, what got her into trouble was that the city was running low on its cash balances. Employees were starting to have their paychecks bounce when they went to deposit them at the bank. Once her fraud at the city was uncovered and started to be investigated by the FBI, they looked into her role at the nonprofit and discovered the fraud scheme that she had orchestrated over there as well. So once she was caught, she was fired immediately from the city and the nonprofit and eventually charged and sentenced to 40 months in federal prison with orders to pay $552,000 in restitution and fines to the city and nonprofit victims. So one thing that I thought was interesting in all of this is that she was able to gain such a high level of trust from her fellow employees as well as members of the city council. And that in turn, of course, allowed her to gain the opportunity to commit fraud. Her finance experience, the fact that she was from the St. Louis area, the fact that she served on a local nonprofit, all helped her to be seen as trustworthy in the city's eyes and in the nonprofit's eyes. And that's very similar to what we typically hear with fraud cases and stats on this stuff. It's never someone you would expect to find in the newspaper. It's always someone you know and trust, someone who has a family, someone with a great reputation. But that's exactly why internal controls, of course, especially those corrective controls Ashley talked about, are really important. And they can help your organization routinely monitor the controls in place in light of changing risks and can help identify where opportunities for errors or fraud exist so that controls can be updated and implemented as new risks pop up. And in this case, Benita would have had a much harder time doing what she did if others were involved with tasks such as performing the bank reconciliation, recording the payments, or completing analytical procedures to identify the unusually high level of expenditures. All right, so now that you've heard the full story on this first case study, I'll stop there for a minute to pass the mic over to Amy so we can head to our first polling question.
All right, thank you, Keith. So yes, our first polling question is, what corrective controls were needed to help the city improve? And there are a few different options of controls listed below, and then also D, all of the above. And we will give you a few moments to respond. Please click the button next to the answer you choose and hit submit. And if you can't see the submit button, please just enlarge the slide area. And then also, as a reminder, if you would like to receive CPE for today's webcast, you will need to respond to at least 3 of the 4 polling questions. I'll leave this up a few more seconds here. All right, here are the results.
Perfect. All right. Thanks, Amy. Well, looks like most of you chose answer D, which is obviously correct given the many, many control deficiencies we saw in this case study. But I think now we wanted to take a minute to kind of talk about what we can learn from this case and how it relates to the COVID environment, of course. And although this case did not occur during the pandemic, it highlights, I think, some of the challenges we're seeing many local governments face with respect to internal controls during the remote work environment. Even with many people kind of working remotely right now, one of the areas we routinely hear from clients that has been challenging to do in this remote environment during the pandemic is process payments. Certain individuals need to be in the office to perform various tasks that might include processing, printing, authorizing, and issuing payments. The problem we're hearing about is that fewer individuals are in the office due to the remote work environment. So you don't have the same level of eyes on this process, making segregation of duties more challenging and ultimately sometimes creating additional risks for ability to circumvent controls. So even in medium to larger governmental entities, the control environment in the office during the remote environment can be much more similar to that of a smaller organization, given the limited personnel in the office these days. And that just reinforces a key point that we need to remember the importance of good corrective controls to make sure we're routinely monitoring the control environment and making updates to our system of controls as necessary to address those new risks as they pop up, and especially during the remote work environment. And I would also argue that routine analytical reviews are really important in this environment, and those can be a really effective tool for detecting unusual relationships or trends in an organization's financial data. We're in a great spot today in terms of all the electronic applications and data visualization tools available that allow us to automate our analytical reviews. And that makes identifying anomalies, unusual relationships much easier as they stand out in various graphs and visuals using tools such as Tableau or Power BI. And I'd say that's one area we've been helping a lot of clients with and hearing a lot from lately as more and more government entities look to kind of boost their analytical reviews and make them much more efficient and real time in this process. All right, so we've mentioned the Certified Fraud Examiner's report a few times. Wanted to highlight a few more things from the report on here. And I think the first one Ashley touched on in terms of asset misappropriation kind of being the most common on here. But the second one is pretty interesting, that we saw a total of 12% of fraud cases didn't involve any attempts to conceal the fraud, which is exactly what we saw in the Velda City case here. I saw that fun fact in the report and was just blown away that so many fraud cases occur without really any efforts to try and hide it. But what that tells me is that fairly simple controls and analytical procedures can be established that would easily prevent or detect some of these frauds much earlier in the process, especially when they're not trying to conceal them at all. And then a last interesting fact here is that many fraud cases are detected by employee tips, as we all know, but the likelihood of receiving those tips increases from 36 to 48% when the employees had undergone some level of fraud training. So what we find a lot of times is that the finance and accounting employees may have attended various ethics or fraud trainings, but other departments may not have had the same opportunity to learn about fraud risks and the role they play in the organization's system of internal controls. So I'd say that might be something to consider if it's not currently one of the tools that your organization is using to inform all the employees about the importance of internal controls and preventing and detecting fraud. Okay, with that, I'm going to pass over to Ashley for the next case study.
Okay, thanks, Keith. So this next case study takes us to the town of Anson, Maine, kind of in the middle of the state of Maine. And this features Claudia Viles, who is a tax collector. So Claudia grew up in Anson, graduated from Anson Academy. In 1967, she earned an associate degree in medical science before transitioning to a medical secretary prior to marrying her high school sweetheart in 1971. She began her career as the elected town treasurer in 1973, and then beginning in 1976 as a part-time secretary at the town office. She was first elected to the post of tax collector in 1982 and held that position until resigning in 2015. So Viles, many of the articles that I read in preparing for this presentation really painted the picture of Viles being described as someone that was kind, compassionate, always caring for others, kind of like what Keith had mentioned earlier, you know, that trustworthy person that you would never think had the ability to commit the fraud. So in an article that was written about the trial, the writer indicated Viles had time to visit with the sick and the grieving and be so kind and compassionate, largely because she was setting her own office hours, which were oftentimes less than 40 hours per week and often not at the town office. Now, this fraud obviously took place prior to the pandemic when it wasn't really that normal to not be at the office from 8 to 5, Monday through Friday, which over the course of the pandemic has definitely shifted quite a bit. But as an elected official, she also set her own salary, which ranged from $30,000 to $40,000 per year, and she was paid at random increments, kind of depending on when she submitted invoices to the town. And ultimately, there was little oversight over the amount of money she requested and when she received it. So just a little bit more about her kind of trustworthy and compassionate character. So, you know, many of her supporters said that that kind of character was really at odds with her criminal conviction, which is something that I really took note of. I mean, the fact that someone is nice, like I said, doesn't necessarily mean that they're trustworthy. That's why, as auditors, we can't trust, we have to verify, and we always are saying, you know, trust is not a control. Many wrote letters to the jury in support of Claudia throughout the trial, kind of detailing her unwavering generosity or her thoughtfulness. So the letters said that she, you know, often acted as a secret Santa who would bring presents to the doorsteps of needy families. She was known for comforting the sick, sending cards to friends, even though they lived in the same very small town, sharing books on grief, and then showing up at the door with homemade soup or an offer to go on a walk. So let's get to kind of what happened with Claudia. So ultimately, Claudia embezzled more than $500,000 in excise taxes over a 5-year period. The documentation that Claudia maintained showed that the numbers on the treasurer's receipts, so the treasurer's receipts, what was actually deposited in the bank, and the adding tapes, those numbers all agreed, but the kicker was that the adding tapes didn't actually add up to the totals listed, to the tune of approximately $500,000 between 2010 and 2014. So additionally, it was noted that while Viles was on vacation, Anson residents, those that lived in the town, could register their vehicles in other towns that would then send the excise tax collected to Claudia, and Claudia would deposit the money but never filed the registrations, essentially using those reimbursements to cover up for money she had already taken. During the trial, the town's auditor, which I think is their internal auditor, testified that the mistakes were never noticed in the past because those motor vehicle registrations weren't part of the general ledger. He also noted that his review of excise tax collections were very consistent over the years, with the exception of 2014, which is when she got caught, when there was an increase of about $50,000. The auditor testified that he had warned Anson town officials about problems that could arise from the way the town handled excise tax money, but those warnings ultimately went unheeded until a new computer system revealed those discrepancies. The town implemented a new computer system in September 2014 for excise tax collection that included daily deposits, as opposed to the inconsistent deposits that Biles had made, and obviously made them agree. It's hard to know really what Biles spent the embezzled money on, because her and her husband did not file income tax returns for several years before the start of the investigation. But several articles mentioned that they had quite a few real estate holdings with no significant liens on them, so potentially used that money to purchase real estate, and that real estate is now being liquidated to pay back the town of Anson, Maine. Claudia was ultimately sentenced to serve 5 years in prison and pay $566,000 in restitution. So I'm going to hand it over to Amy to run the next poll.
All right, thank you, Ashley. So our second polling question is, what controls could the town of Anson, Maine have put into place to prevent this fraud? A, use a system of checks and balances to ensure no one person has control over all parts of a transaction. B, protect cash and check collections. C, provide free vehicle registrations for all who reside in the town of Anson. Or D, both A and B. And if any of you are having difficulties with the selection buttons for the polling questions, just please hit F5 to refresh your screen. And as a reminder, if you can't see the submit button, just enlarge the slide area. We'll leave this up a few more seconds here. Okay, here are the results.
Okay, thank you, Amy. Well, not a very tough question here, more of a softball, but yes, both A and B, and we're going to go through both of those items on the next slide here. So some key controls to kind of prevent or detect the fraud that happened in the town of Anson, Maine, is really using a system of checks and balances to make sure that no one person has control over all parts of a financial transaction. So many witnesses testified that Claudia had no oversight. No one kept track of the excise tax money that she collected. She resisted learning to use a computer. Attempts to make collections and deposits more efficient were ineffective at the town. And once those discrepancies were pointed out, some of that paperwork started to disappear from the town office. So 3 ways in which you can make sure that your controls are sound to detect fraud, separating the handling of functions, segregating those duties from the receipt and deposit to the recording of the transactions and reconciling those accounts. At least 2 people is ideal, 3 even better. When opening mail, endorsing those stamping the checks for deposit only will help ensure that those checks get deposited. If that's impractical because your organization or your municipality receives so many checks, many of our clients are already using a lockbox, excellent alternative to this. And then if your agency or your organization is so small that you can't separate the duties, then requiring an independent check by a board member, a commissioner, someone kind of outside the finance department or outside management, that's also a really good control to implement to ensure that there is at least a little segregation of duties. Someone else is putting their eyes on the information that's flowing into the general ledger. The other key control, obviously, is protecting that cash and check collection. So, ensuring that all the cash and checks received are, first of all, promptly recorded. Claudia didn't really do that. And then deposited in the form originally received. Those are really important items to consider. And then issuing receipts for cash. I know that cash doesn't really get transferred a lot these days, but if there is cash that's received, being sure that there's a receipt for that on a pre-numbered receipt book, and making sure that if there's any missing receipts, that those have some business purpose explanation behind that. And then reconciling those cash receipts daily with appropriate documentation. So whether that be cash reports, receipt books, adding tapes, making sure those tapes add up correctly. All of those things are really important to ensure that all the cash and checks that are received by your organization, municipality, or agency, whatever, actually make it into the bank and then get recorded appropriately. I'm going to hand it back over to Keith to go through our next case.
All right, thanks, Ashley. So for our next fraud case, we're going to Baltimore, Maryland. And this one involves a department and an individual outside of the finance and accounting function. And our main fraudster in this case is Ronald M. Smith, and he served as a supervisor for the Water and Wastewater Division of the Public Works Department for the city of Baltimore, and that was from 2014 through 2015. And we also know that Ronald generally worked the night shift, as you can see here, which was in general scheduled from about midnight to 8 a.m. And he had a team that he supervised that consisted of a crew of about 8 employees. And then as a supervisor, he had several responsibilities, and some of those he was responsible for various items, including initiating work orders for new projects, coordinating and dispatching his work crews, supervising job sites on top of that. And as a supervisor for his crew, he was also responsible for approving the hours his team members worked during the night shift. So at first glance, this probably seems like a fairly normal situation that many of us have in terms of public works departments and supervisors and everything in the fact pattern here. And we also don't see any indication that Ronald had access to financial systems or any role in the disbursement process. So you might wonder, how did a public works supervisor steal funds from the city? Well, what we found is that Ronald started directing his public works crews to perform various construction projects directly for developers and private businesses in the area. And these projects were unauthorized, obviously, by the city, and Ronald did not obtain, as you'd imagine, the necessary permits or pay traffic fees that are required to perform that type of work. And then on top of that, Ronald collected the cash payments directly from the developers while in the field. So the city was ultimately unaware of the projects and the cash payments that were going to Ronald. And in all, he was able to gain about $64,000 from the services his city crews provided for about 22 combined residential and commercial properties. And performing the work didn't set back his other projects either, as they were able to complete the work outside of their standard work hours and charge overtime as they worked on these additional projects. And then since Ronald was in a supervisor role, he was able to approve the overtime hours for his crews just to make sure that they got paid for those additional hours that they worked without others at the city, needing to review or approve the overtime on top of him. So he was in that perfect position to commit the fraud, as there was a lack of segregation of duties, but more importantly, his crews did not undergo any fraud or ethics training that would have helped them identify and maybe report the issue to the city early on in the process. And I think that's where that stat from the fraud examiner's report that I shared earlier comes into play. As we noted, that fraud is more likely to be identified through an employee tip if the employees have been through routine fraud and ethics training. The most surprising thing to me in this case is that the crews didn't seem to question the activity or raise a red flag during the process. And he had 8 people on his crew. I think that's a perfect example of why it's important for not only finance and accounting employees to attend fraud training, but individuals in all departments and at all levels. And when you think about the COVID environment we're in right now, frauds like this are more likely to occur as employees have, of course, more pressures to commit fraud and are able to rationalize it more due to the pandemic. And I think if we're all trained up on this topic, then more employees can be eyes and ears for all of our organizations and report out suspicious activity when they see it. Okay, so we all want to know what happened to the fraudster and how was it caught? Well, the fraud was identified through an anonymous tip, but we're not sure if it was ultimately someone from the public works crew or someone else. But we do know that Mr. Smith was ordered to pay forfeitures of $64,000 for his financial gains from the fraud, and he was also sentenced to 1 year in federal prison. So for the dollar amount, that might not seem like a significant amount of money for a city the size of Baltimore, but we know that his gains were less than $10,000 for each project that he performed. So they were small amounts that added up over the 22 different properties he illegally did work for. Not to mention the city incurred overtime charges and paid his crews for the time they spent on these projects. And those small amounts can be hard to identify, but they can add up to a much larger amount over time. So if the fraud had not been reported earlier in the process, it could have grown much larger. With that, I'm going to pause and pass it along for the next polling question.
All right, thank you. So our third polling question, how could this fraud have been prevented? A, better segregation of duties to separate those who are authorized to open new work orders. and those who can authorize charges to those work orders. B, better oversight related to overtime charges incurred. C, require annual ethics fraud training for all employees, or D, all of the above. And for those of you that would like a copy of today's slides, you can download them from the folder that says slide deck and handouts. And we will also be sending them via email tomorrow along with a recording of this webcast. Okay, here are the results.
All right, thanks, Amy. Appreciate that. And yes, these results, like with the other ones, and yes, it's again a softball question, and most of you selected the right answer. But the point is to be able to identify the risks that were present and how we might change our system of controls to address those holes in our processes. Now, we've talked a lot about the importance of corrective controls and routinely monitoring the control structure, but I think an equally important key here is the understanding that fraud prevention and detection is not just the accounting department's responsibility. It's an organization-wide effort, and that starts from the top down. It also starts with an understanding that we all play a part in internal controls. And when you think of whether it's approving time cards as a department supervisor, reviewing charges on a P card or employee expense report, or reviewing the charges in a work order. Many different employees and departments play a role in internal controls, and that means that having regular training on the importance of internal controls and making sure employees understand, the different avenues that they have for reporting out suspicious behavior. Those things are really important in preventing and detecting fraud. And I know we've been able to kind of help in some of those trainings for a number of our clients as well. It's really interesting to hear in those sessions the questions and comments that come from different departments, as some may think controls are just an accounting responsibility, and any reviews or approvals other departments perform are ultimately reviewed by accounting. So it's not as important to do a thorough review of time cards or invoices or employee expense reports, even if those people are actually signing off on them. So I think kind of resetting those expectations and the overall understanding of everyone's role with internal controls is really kind of the big benefit and value that you get coming out of some of those trainings. All right, so delving back into some of the more of the fun facts from the Fraud Examiner's Report, we pulled out a few items here that I thought were interesting and pertinent to the case study we just went over. First, we noted that some of the key warning signs in fraud cases include an unwillingness to share duties and having an unusually close relationship with a vendor or customer. In this case, I didn't mention earlier, but the fraudster had issues with giving up control over the crews he managed and had a very close relationship with a third party that was funneling these private jobs to him and his public work crews, which is pretty interesting. And then in addition to that, the next fact just further supports the point that fraud can happen in any department. Not only that, but it actually occurs more frequently in the operations department than any other department within an organization per that Fraud Examiner's Report. And it accounts for a total of 15% of fraud cases. And this last fact, probably not too surprising, but manager-level fraudsters are more likely than other types of fraudsters to override existing controls. And you just think of the access that they have to IT systems, their ability to influence those that they supervise, and the trust that the organizations put into them. That just puts them in a unique position to override existing controls, and that's kind of exactly what happened with this fraud case. Okay, with that, we're going to go to Ashley for our final fraud case.
Okay, thanks, Keith. So this last case takes us to South Whitehall Township in Pennsylvania. And the fraudster here is Nancy Tonkin, who ran the township's utilities department for about 3 decades. And her husband didn't really play a part in the fraud specifically, but he was part of the plea deal. So that's why I included some facts about him here. Married to William, police officer in the same township from 1969 to 1996 when he retired. So for many years, Nancy Tonkin was a single worker on the 110 employee staff at the administration building. She had complete autonomy over billing and payments for water, sewer, trash services. So she processed payments and bank deposits. She adjusted customer accounts and handled complaints. She also reconciled the cash drawer with no one verifying checks or cash received. Additionally, all employees had unlimited access to the township's mainframe computer, and all finance department workers had the combination to the department's safe and could access the cash inside the safe at any time of day. So lots of red flags here. So Tonkin actually used a sophisticated lapping scheme to conceal the theft. When a resident paid one utility invoice with cash at the township building, the money was never deposited in the township's bank account and wasn't credited to the resident's account. When the next resident paid a bill by check, that check would then be credited to the first resident's account and then deposited in the bank. If a third resident paid an invoice with a check, that check would then be credited to the second person's account, and on and on and on we go. The scheme would continue until they were about ready to send out the quarterly billing. And at that point, Tonkin would then have to pull invoices because they would obviously indicate a resident had not made a payment because the account had not been credited, which wasn't the case. So the theft actually only came to light after a restructuring was done within the finance department. There were lots of indications that the individual that was supervising her over the years didn't have the skills, knowledge, or experience to really do so. And that kind of restructuring included appointing a new finance director who noticed obviously some red flags here, including lack of adequate policies, procedures, and internal controls necessary to prevent the fraud from occurring. You know, much of the money that was stolen, which amounted to about $850,000 between 1999 and 2012, was really used to just live beyond their means. They financed a gambling habit with it. They were seen at multiple casinos on the East Coast, those types of things. So as part of a plea deal, Tonkin actually pled guilty so that her husband wouldn't have to go to jail, and Nancy was sentenced to a minimum of 2 years in prison, and she and her husband have to forfeit their retirement savings and pay $333,000 in restitution. So I'm now going to hand it over to Amy to run our final poll.
All right, thank you. So our last polling question is, what were the missed red flags in this case? A, lack of segregation of duties. B, lack of appropriate oversight. C, the Tonkins appeared to live outside of their means. Or D, all of the above. And once you've completed all CPE requirements, you will be able to download a PDF of your certificate from the CPE progress window that's in your console. We'll leave this up a little bit longer so everyone can get their CPE credit. Okay, here are the results.
Okay, thanks, Amy. Another softball question here, just to make sure that you guys are all getting your CPE, but yes, D, all of the above is correct. So let's talk a little bit about the key controls to prevent and detect fraud at South Whitehall Township. So there were several problems in this particular township that have been now corrected as a result of the fraud, and most of that is by implementing a system of checks and balances to really ensure that no one person has control over all parts of a transaction. So the first problem, which you may have heard, was that one employee had full control over the billing procedure, including downloading meter readings, sending out invoices, processing payments, adjusting customer accounts, and then handling deposits and complaints. So a lot of duties there, only one person. Additionally, all finance employees had the combination to the finance department safe, so anyone could access it at any time. And finally, a receptionist would open the mail and send it to the finance department, but wouldn't actually remove the contents of the envelope and log it in a log. So since the fraud has been discovered, there have been some changes. The township has divided those billing duties among 4 employees and meter readings between 2. Account adjustments have to be approved and signed by 2 managers. Invoice printing and mailing have been outsourced, and now only 4 managers and the manager's assistant have that combination, and management must be on township property for deposits to be completed. So, and in response to the third problem, the township actually follows the advice listed on this slide, which is the receptionist now opens the mail, stamps the back of the checks for deposit only, and forwards to the appropriate finance employee. The overall theme of the changes that were made here were obviously in the spirit of segregation of duties, which is kind of the overall theme of this particular slide. just ensuring that no one person has control over all parts of that financial transaction. The other problems included that the same employee who performed the water, sewer, refuse bill check process also reconciled the cash drawer. The check register was not linked to an internal tracking device, and there was no process in place to verify the amount of checks and cash received. So additionally, payments for water, sewer, and trash were accepted on one check, and one person was permitted to split the checks using cash. So in response to the fraud being detected, the township has now segregated those duties. So an employee who has no involvement in cash transactions reconciles a cash drawer in line with what's included on this slide, and all transactions are logged in a detail. And then the cash register is linked to a tracking device. So also payments now must be made in separate checks. Finally, a bit unrelated to this slide, but important to note, the township also locked down its computer to ensure that only those that require access have it. Something that we've noted, over the past few years, super user access is critical to review and ensure that there's a business purpose behind that. So all of these are important controls really just to put into place to help prevent a similar fraud scheme from happening in the future. Now I'm going to go ahead and hand it back over to Keith to wrap us up.
All right, thanks, Ashley. So yeah, that's the end of our fraud cases that we're going through, but we'll just leave you with a few other stats from the ACFE report. And I think there's some interesting stats in here, including the fact that fraud can really, impact any organization in any industry and any country. And the financial impact is often significant, with the median impact is shown on here being $125,000 in reported fraud cases and an average loss of $1.5 million, which I think Ashley shared earlier. And they also estimate that a total of 5% of revenue is lost to fraud each and every year, which is just astounding to me, and demonstrates that we still have a ways to go with communicating the importance of fraud prevention and detection and the various tools and techniques that are out there, especially when we see here that the typical fraud case lasts for over a year before it's caught and costs about $8,300 a month. And I think the last time this report came out, because it comes out every 2 years, the last time it came out before this one, the typical fraud case lasts for about 60 months. So maybe we're getting a little bit better overall as we're down to 14 months, but we always can do more to better identify new risks, such as those that have come out of the remote work environment. We can do better by implementing new controls, better at utilizing technology to help us with not only security and access to our IT systems, but also with performing better, more efficient, and effective analytical procedures using some of the data analytics tools that are out there that we've been able to kind of help some of our clients with so far these past couple of years. All right, last set of stats on here from the Fraud Examiner's report. I think this really helps highlight some of those entity-level controls that can be really effective in the fight against fraud. A lot of times we focus in on segregation of duties and specific internal controls such as reviews, approvals, and reconciliations. But equally important are some of the entity-level controls that can be put in place to help prevent fraud. The first thing to highlight on here, of course, we've talked about fraud hotlines and the effectiveness of those, but this kind of puts it into perspective with some actual numbers here. So not only are you more likely to identify those frauds faster when there are fraud hotlines out there, but the organizations that have the fraud hotlines incurred losses at about half the level of organizations without fraud hotlines. And I think that's a really important stat because it really shows the benefit of having a hotline on an organization's ability to detect and mitigate the impacts of fraud. It's not just a nice tool to have for larger organizations. There's a real financial benefit to having one. As you can see, the median fraud loss was about $100,000 for organizations with hotlines compared to almost $200,000 for organizations without those hotlines. So pretty interesting there. And then another important item on here that we've talked about a little bit throughout the presentation is the efficiency and effectiveness of identifying fraud in organizations that regularly have a lot of their employees attend fraud and ethics trainings versus organizations that do not. So tips are much more likely to be submitted in organizations that have had fraud training, as the employees better understand the red flags, their role with internal controls, and what suspicious or fraudulent behavior might look like. So that's another important entity-level control to consider, especially in this environment with all of the new risks and new employees coming on board. So with that, I think we'll wrap up and just leave you with that if you haven't done a recent assessment on your internal controls in light of new risks, new IT systems, new employees, new transactions, and definitely the remote work environment, this is the perfect time to be reconsidering your internal controls and your internal control environment overall. It's a perfect time to be asking questions like, how have our risks changed in light of COVID? Do we have an anonymous way for employees to report suspicious behavior without fear of repercussions? Because what good is a hotline if they can't feel like they're going to be reporting anonymously, or if they have fear of repercussions? Do we feel like our employees outside of accounting and finance have a good understanding of internal controls and the role they play on a day-to-day basis with carrying out internal controls? Are employees generally aware of some of the warning signs and red flags, like a few of those we've just discussed from the fraud examiner's report? What are the employees' general outlook on internal controls? Whose responsibility is it to carry them out? All of those items should be considered and reconsidered on a routine basis, just to make sure that your organization has put its best foot forward with staying on top of all the latest fraud trends and risks. So with that, I think we're out of time, right on time at 11, so I will pass it back to Amy to wrap things up.
All right, thank you. And thank you, Ashley and Keith, for a great presentation today. And unfortunately, we are out of time, but if you submitted a question that we did not get to, we will do our best to follow up with you after the webcast, or you may reach out to the presenters directly. And I will keep the webcast console open for a few minutes to give you time to download your CPE certificate. A copy will be emailed within 3 weeks should you have any difficulty downloading it now. And as a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in your console. And finally, here's a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey, as your feedback is very important to us. And thank you for joining us. We hope you'll join us again next time.